So right now, the investors who bought these properties only have, a few options. They can either capital call their investors and try to buy down their loan so that they are back in out of technical default. They could raise a little bit of capital and go out and buy a rate cap to try to mitigate a little bit of that the interest rate problems. They could sell the property to get out of that technical default, or worst case, if they're not able to sell and they're not able to raise any more capital to buy it down, they're going to foreclose on those properties. So at this point, anyone who's cash flush, any fund or any sort of private investor who has a lot of cash can take advantage of these specific opportunities that are only really happening because of this interest rate recession kind of perfect mix. It's not something we're probably going to see again for 8, 10, 12 years. We don't really know how long that is cyclically, but if you look at the crash in 08, you kind of think of now it's 15 years later. This may be another opportunity 10, 15 years down the line, but if you can take advantage of this over the next 12 to 18 months, you're really going to be in a great position, not only cash flow wise, but when you go to do that exit, refi or an exit, you're going to have a much better return than you would have, say, if you bought this property back in 2020, and now you're in this high interest rate environment where you're not going to get the same equity multiples that you may have thought you were going to get in the beginning. So it's a really good time to be cash flush.
And mark my words, Jonathan, interest rates are going to come down, and they're going to go below where they were at 2020 in 2020, because it has to, because just the money supply is so massive. We're going to continue to print money. Interest rates will go below there. How long it takes to get there, though, we don't know, right? But what they're doing is de-incentivizing people to buy real estate, commercial properties, things like that, right? Because there's only so high you can boost up rents, right? And the interest rates are so high. So just keep in mind, the properties that you buy today, if you can hold on, like Jesse's saying, there's going to be some people that can't hold on, and that's going to present a great opportunity to all of us that are out here looking for it. But if you can buy these properties and hold on and wait for interest rates to come back down, cap rates to come back down, there's going to be a ton of built up equity here where, people are going to come out on the other end screaming.